So it's been an interesting day in the markets and in the headlines today and yesterday. So we have three different things coming together. So thing number one, let me move this screen so you can see here. This is a chart of the VIX and of the S&P 500 going back a year. So we've seen that the VIX has been pretty low, and there is a saying, when the VIX is low, it's time to go. Meaning that so the VIX is a measure of derivatives implied volatility at future dates for the S&P. So basically, when the VIX is low, that means that the market is relatively complacent, and when the VIX is high, that means that volatility is high, and generally that translates to fear in the markets and falling prices. So what happens is that when things are good, stock market's rising, people relax, and volatility gets compressed, and the VIX goes down. So that it keeps going down until it turns around, and it tends to bite people in the ass. So over the past year, that number's been around 12. So here, back in April, you can see the numbers up here. It actually hit 11 on the 17th, and then when the VIX does turn around, you can see these regimes of falling VIX. When it does turn around, the market here comes down. So again, it reached down to the 11-12 range. I guess this low was 1201, and then it started kicking up. I guess the very low was 1169 there, and then we had a market drop. As the market dropped, the VIX went up because volatility was expanding. Here we had a little intermediate dip, and that got down to 13, and now we're back down to we got into the 12 range, 1205. Oh, it actually hit 1192 there, and it came up yesterday and it popped a little bit today and went back down. But that could be the starting point of a reversal in the S&P, because we've been at record highs. Now, completely contrary to that, we have this chart. Now, this is the Federal Reserve total assets. This is going back to 2008. You can see this is the financial crisis right here. They start printing, and you QE1, QE2, QE3, and then maintaining, and then the taper. The roll-off, rather. And then we have the QE4, which is not QE, right? Because Powell says it's not for some reason, whatever. Now, this is a very bullish indicator, because the Federal Reserve assets translates into money which goes to the primary dealers like Bank of America, Citigroup, and whoever, the big banks, and they tend to use that money to buy stocks and buy bonds, and generally probably the market. So here we have a negative indicator, and here we have a positive indicator, and then we have the political situation with the impeachment stuff is just theater. Nothing's going to happen there, I don't think, and I don't think the market thinks anything's going to happen there. But what is important is the relations with China and the Hong Kong support vote. So yesterday, the day before, the Senate passed a bill supporting the rights of people living in Hong Kong, saying that they should not be attacked by their government for whatever reason. And today, the House passed its version. So chances are that will then I'm not sure if it needs to be reconciled or not, but whatever it is, it'll end up going to the president's desk, and the president will either sign it or veto it. Now, if he signs it, that is support for Hong Kong. That is bad for negotiations on trade deals. And the market algorithms have been buying like crazy on trade optimism headlines over the past couple of months. The Secretary of the Treasury will float some rumor saying, "Oh yeah, things are looking good," and stocks go up. So if the Chinese walk away from the table and say, "F you," we're not going to deal with you if you are trying to interfere with our internal politics, then that will be a bad sign for the algorithms who buy and sell on these kinds of headlines. It's also generally a an impediment to trade. Less trade, even less than we have now, means less money circulating, less profits, less lower stock valuations. So um, so option one, Trump signs it, right? Or Trump signs it. Chinese are upset. Whether they actually walk away or not depends, right? Option two is Trump vetoes it, and then his political rivals on right and left can start coming after him for being weak on China, which I don't think he wants to do. And I'm gonna turn off my phone here. The that will not bode well for markets either. So we've got basically the Fed pumping money in to support things. We've got two different forces pressing down. So it's looking like we're at some kind of intermediate top. Chances are this downtrend is going to continue a bit, and at least that's the way I see it. So if you see it differently, let me know and leave a comment below.